SharePrices.com.au studios, I'm CJ Dore, and in this video series we're looking at how to get started in the marketplace with your trading and investing. Now up to this point we've looked at different investment products of where you can put your money. Now one of those that we're going to focus on this time is the futures market. So this video is all about futures education. So what are futures and what is the futures market? You may have heard of it, but it's basically about estimating the particular price in future of something. And let's look at some of those things you can trade on an expiry cycle. We've got stock indices. So what we know is that the market's always on the move over 5 minutes, 1 hour, a day, a week, a year. It's going in one direction. Now a successful futures trader is looking at to anticipate and analyze which direction is it going in. Now the most purest form of futures is what is it going to be worth in future. Now futures contracts have a monthly expiry cycle and you can trade it in one direction up to that expiry. You can sell your contract, buy it back and keep trading it if it's going in the direction that you anticipate. Now it applies to anything you can trade on the futures market. The key, what is it going to be worth in future? And that's how you buy and trade futures contracts. Moving on, let's have a look at interest rates. You can trade those on the futures market. Now sometimes they're put on hold, but they will keep moving overall, sometimes downward for a very long period of time, sometimes upward, but they will be on the move and you can trade that movement anticipation. Right now it's at X, but where will it be in future? Also currencies, trading a currency, here it is right now, but where will it be in future? You take out that futures contract, trade it to an expiry date if you like. Now we'll also have a look at energy. Different energy sources can be traded as well on the commodities market. And let's have a look at some of these commodities that is on the futures market that you can trade. And you may have heard of. We're looking at gold, oil, wheat and cattle. A couple of good Aussie tradable commodities there. And let's stay with wheat for example here and show you how it can be traded as a commodity on the futures market and how you buy that contract. Well, here's some wheat here, a good golden crop, blue skies and happy days. So let's say we've got an Aussie farmer who's got his wheat due. This harvest is going to be due in 6 months from now. And he's anticipating an expected income there of $1 million for a good crop. Now, is it going to be worth the million? Will you get that for it? What's going to happen? Maybe with currency, maybe overseas intervention, maybe governments are going to play a part. Maybe some government will say, we're not importing from you. All sorts of things could happen in 6 months. So the farmer has to go into the market. And when you go into the market, in the futures market, you're either going to be hedging or speculating. Now this farmer, we'll give the example, he's going to be hedging or he is a hedger. Now you know the term hedging your bets, a bob each way, making sure you don't lose everything. And this is about the farmer's income. Now he expects $1 million for it, but it's not a guarantee he'll get that for it. So the futures contract is taken out and he'll hedge his bets and he'll say, well, I tell you what I'm going to do. Instead of trying for the $1 million, I'm going to lock in $850,000. Now someone on the other side is going to buy a contract for the $850,000 worth of wheat. Now they hope that it's going to be worth more. They hope it is worth $1 million, and that's how they make their income, the difference between the two. That's a successful futures trader. But for the producer, the wheat producer, the farmer, he has to take in mind what could happen between now and future. And that's where you bank on, take a contract out on the future price of something. And that farmer will keep trading that. So when it's due, hopefully $1 million, but he's going to hedge and take $850, lock it in, deliver that wheat. Might be worth more, but at least you know what that income is worth. And that's about the futures trading. In this case with the farmer, he's banking on the future income of his crop. So that's what it's all about. There's a good local example of an Aussie wheat farmer and how it's done. And that's part of our How to Get Started series. And one of those investment products is the futures market. So hopefully you've enjoyed that and it might be something you're interested in. If it is, get in touch with us, info@SharePrices.com.au on the emails. As for now, I'm CJ Dore. Happy trading from the SharePrices.com.au studios.